Hello, everyone. I'm Vince. This is the Hartnett Flow Show walkthrough. As always, the weekly report will be presented two ways: video walkthrough with commentary, and the second way is Hartnett's main points are broken out on the right-hand side below. New subscribers are encouraged to listen for a translation of Michael's peculiar brand of lingo and Goldfix's nuanced take on his excellent analysis. Enjoy. Today, this looks like a report that you would put out. Just a quick comment on this report. Looks like a report you'd put out before you go on holiday. Now, I don't know that he's going on holiday, but summer doldrums or summer beach time, I think, might be coming here. So while there is some original writing here. He's not just phoning it in. There's really not a lot of uh, new material here, right? So he's updating current situation, specifically BIG, uh, showing some recent data that either confirms or contradicts it, and moving on. There's very little commentary about gold itself, but there is implicit commentary about gold on several fronts. I think the last paragraph, which discusses AI being either inflationary or deflationary, it's only one paragraph, but I think it's an important theme going forward. So we'll probably spend a little bit of time on that. So for the most part, I'm gonna read it and throw in the actual connecting words that he omits. So I'm gonna read this, and you can follow along, or you could probably listen to this one if you're in a car. The Flow Show, the bros, the base, and the billionaires. Scores on the doors: gold 27.7% up, stocks up 6.7%, government bonds 6.1%. Investment grade bonds 5.8%, high yield bonds 5.0%, cash 1.8%, commodities minus 1.7%, US dollar 8.9% down, crypto down 10%, and oil down 12.4% year to date. There are four zeitgeists today, four quotable quotes. Number one, quote, Trump cuts taxes like a Republican, spends like a Democrat. Doge was a bust. Tariffs are a bust. So the only way he gets the deficit down to 3% of GDP is via max pumping of GDP and hoping Bessent can sweet talk the vigilantes. That's from a bond bear. And we would add weaken US dollar. Zeitgeist 2, quote, it's like the 1980s deregulation boom and the 1990s tech boom all at the same time, says a stock bull. This is, we would note, similar to what we said last week, minus an important part. The stock bull sees the same thing we see and says, oh, we're in the process of a deregulation boom. We're in the process of inflation being squashed, and we have AI coming online for a tech boom. So this is bullish for stocks. That person does not see the 1970s risk persisting, the stagflation risk that we were talking about. The 1976 to 1991, I think, was the title of that Hartnett report that we discussed. But that is how you would see it if you're a stock bull. If you're a stock bear, you'd say stagflation only. So we're not sure which it is, but it's one of those two. Zeitgeist 3, if the US is so exceptional, why does it need tariffs? That's a dollar bear speaking. Zeitgeist 4, this one's probably the most appropriate. A year ago, with all the student debt forgiveness stuff, I was dreaming I might not need to save to put the kids through college. But now, with all this AI stuff, I'll need to work longer and save more to fund my jobless kids after college, says a New Jersey dad. The Price is Right. Broker dealers are at a 16-year high versus home builders. Chart 3. As Gen Z and millennials shun unaffordable housing and choose to save for future or hedge their AI risk via owning stocks and crypto. The unemployment rate of 20 to 24-year-old graduates is 6%, in the past 3 months, up from 4% in December 2023. He's showing a trade to consider. Essentially, broker dealers are a reflection of the market being uh, about to do well. Financials usually lead, but home builders don't lag by this much. So if you're bullish on the market, you would be a buyer of home builders. And if you are bearish on the market, you'd be a seller of broker dealers. The other, probably more obvious point is he's saying that the spread could be, at least in part, a function of Gen Z, millennials, uh, not buying housing. And so they're plowing into AI stocks and crypto. I think it's kind of significant. The unemployment rate of 20 and 24-year-old graduates is 6% in the past 3 months, up from 4% in December 23. Um, Considering that the Fed was just going through a hiking cycle and unemployment for 20, 24-year-olds is um, higher now. Certainly we're not China, but it's a pretty higher number. I guess you'd have to look at the context, like how volatile is that number. Next, tail of the tape, US dollar breaking down despite 5% treasury yields. Chart 4, because the US government is spending 7 trillion with revenues of only 5 trillion for a deficit of 2 trillion. Because the national debt is 36 trillion, and because the big beautiful bill is set to raise the debt by 1.5 trillion before the 2028 election. And it's because the House and Senate are to also raise the debt ceiling 4 to 5 trillion with July passage of the